Welcome to the room, ladies and gentlemen. If you are brand new with me, it is wonderful to have you. If you've been with me for a while, it's actually still wonderful to have you. Quick reminder, guys, this is an educational room. There is our lawyer stuff. Make sure you know what you're getting into, right? We talk about patterns every day. We talk about rules. We talk about advantages, having an edge, getting into trades that you can prove have the potential to win more than they lose. That's kind of what trading is all about. So we're going to talk about that. And we're going to do what we do, guys. It is, what is today? Today's Friday. Let's check news. Friday, November 21st, guys. Right about now, FOMC member Logan is speaking. Nobody really cares what he has to say. It's low impact. But at 9:45, we do have flash manufacturing PMI, flash services PMI. That is going to be high impact, which means that it could disrupt the market. It could make it jump and bump and do all those things that you don't want it to do. And then at 10 a.m., they're going to follow it up with a little medium impact. The revised University of Michigan consumer sentiment. Tentative cheeseburgers. Do we have tentative cheeseburgers? I don't see it. I don't see it. Oh, there it is. Tentative cheeseburger leading index. I like to make sure cheeseburgers are always tentative, that there's the potential for them. Guys, we just check news to make sure that we know what's going on in the market. Know if there's something going on that could create a little disruption. We're going to go through the day, guys. I'm going to try and slow down. For whatever reason, I am well rested and feeling good. We're going to talk about advantages. So if you're new with me, I want you to start talking out loud in terms of advantages. I want you screaming at your screen, top of your lungs, I have momentum. Because when you have momentum, guys, the market's going to be tough to stop. Saying out loud, I have a clear path. There's nothing in my way. Good morning, OG. And then hopefully you can define your entry. Good morning, Cav. A repeatable entry, a testable entry, an entry that when you take it, you know not only the expectation of the trade, but also where that particular trade may fail. And that's part of the management lesson. When you look at your charts and you say, I have the advantage of momentum, my path is clear and I can define that entry, guys, you have a high probability scenario. This is the best of the best. This is when trading really feels easy. This is just the happy point. But it's a rarity, right? It's a unicorn. More often than not, one of your advantages isn't going to be present. And when one advantage is gone, you're going to call it a medium probability trade. And you may have to adjust your entry and you may have to adjust your management plan, but this is probably going to be most of your trades. You're not going to understand that it's medium probability if you don't take the time to learn the recipe for the high probability. And then finally, when multiple advantages go away, you'll say to yourself, man, that's not perfect. I don't dig that. I don't think I want to be in that market. And it's just what you're going to do every day. You're going to look at it. You're going to talk about it. And you're going to make decisions because I don't make them for you. We do talk about both NinjaTrader and TradingView. They are apples and oranges, guys. The idea is the same. The method is very, very similar, but the presentation is different because they are different time frames, different charts. And I think we're going to do a 101 today because the market's just all over the place. You guys can post, but there's not a ton of posts. So we're going to go through and we're going to do the good old 101. So if you're new with me, this is everything that you're going to possibly need to find success with the software. And it all starts with learning to read your charts, guys. Using a checklist, 3 rules, 2 charts. It's really pretty simple. But you're going to build a foundation that allows you to learn to read your indicators and recognize advantages and focus on the process, not the results, guys. The advantages become your trades, and chart reading accounts for about 90% of the typical day. There will be atypical days, of course, where chart reading is 95%. And sometimes it's absolute gangbusters, and you just never seem to catch a break. But the typical day is about 90% chart reading and about 10% active trading. But once you learn to read your charts, this is the amazing thing. You're going to understand some pretty key concepts. You'll understand where the market is likely to continue. That becomes a way to enter, where you can identify a trend, recognize a couple advantages, and really get into a market at a continuation spot, something that tells you without hesitation, this is where a bounce is most likely to shoot me in the direction of everything that's already going on. You'll understand where the market is likely to go. This is going to help you with targets, and you're going to understand where the market is likely to stop. We call these termination conditions, and termination conditions are what are going to hold you in that 90% more often than not. Being able to look at a chart and say, wow, it just doesn't have anywhere to go. I think I'm going to sit on my hands. Back to this picture, guys. Through your chart reading, you will recognize high, medium, and low probability trades. You are in control of the entry. Knowing what's working for you and against you helps you make decisions not only on entering, but also how you're going to have to manage that trade. So management is where the money is made. Great entries create very manageable trades. As we go through the morning, guys, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to learn it for NinjaTrader. We're going to learn it for TradingView, guys. I'm going to break them both down. Make sure you know which platform you're on. And try not to combine the rules from the two different platforms. It just creates confusion. Everybody can simulate. You can practice. You can get in there. You can break some eggs, if you will. Make mistakes. Sorry, Z-Robot, I see that you just sent me a tech question over here. Send it over to text. It does look a little weird. Talk to Jason. Guys, I'll do all I can to help you with technical issues. Sometimes it's just out of my realm. Tech will help. So Z-Robot, if you're in here, I'm not sure what that look is. I've never experienced it. Jason probably already has a fix. Guys, you can simulate. You can practice. You can get reps. You can work on management. You can practice your entries, practice your exits, practice your chart reads. And you can do it with zero threat of losing money on Simulator. What a great place to learn. And here's the best part about the Nexgen education, guys, is if you take the time to post in my room. Boaz just posted in the room. Awesome, Z-Robot. You should, on your chart, when presented in the room, identify momentum, path, and entry, the same three advantages that we're going to talk about all morning. Whether you are on NinjaTrader, whether you are on TradingView, guys, momentum, path, and entry. And if you take the time to do that, like I hope you will, you get a private session with me. You and I will look at your chart. I'll read what you told me, and we'll discuss it. Was your chart read accurate? Was your entry a rules-based entry, or was it a hopeful entry? Did you trade a pattern that you can prove wins more than it loses? Did you get lucky? Guys, I'm not afraid to tell you you got lucky, because it turns out that luck typically runs out. So practice and post. Practice and post. The people that post the most get the most help. And typically, the people that get the most help move on to do great things with the software. The second thing, excuse me, is keep it simple, guys. Keep it focused. As a brand new user, you don't need all the trades. So I'm going to hand you two plans. Both are labeled the KISS plan. There's going to be one for NinjaTrader, and there's going to be one for TradingView. Now, these plans focus on teaching you to read your indicators. The trades on these trading plans are designed to teach you to read those indicators, to recognize those advantages, and the trade actually optimizes your chances of success. I'm giving you the recipe for the patterns that you can prove win more than they lose. Each plan has a checklist for entry. There's this wonderful moment in day trading where you stop asking if it was a good trade or a bad trade, but you start asking, was it the right trade? Did I follow my rules? Did I have an edge? Did I have an advantage? Now, guys, both of the plans that I just gave you, nobody in the history of following these plans accurately has been able to present me lower than 70% winners. Your results may vary based on management or whatever, but guys, I'm telling you, we're laying the groundwork for success. And then from those very simple trades, those high probability trades, you're going to begin to see more trades, and you'll see those in the room. There's also a spreadsheet for TradingView. There's your trend trade, there's your momentum trade, ideas on management. And then more importantly, no more longs, no more shorts, those termination conditions. When you look at the one for NinjaTrader, it's the same thing. It's those three advantages highlighted in green, what it means to fall into that 90% when your advantages are gone. Once again, there's pictures of trades, like over 500 pictures of client trades. And then the one thing that both share is a trade tracking sheet. So both spreadsheets will have a trade tracking sheet. And the trade tracking sheet is just a place for you to gauge your progress, to take your pictures, to put those annotated pictures in, to talk about your advantages. But guys, there's a section called feedback from class. When you post in the room, it's not the end of the journey, guys. When you post in the room, it's not the last thing you're going to do with that chart. You're going to post in the room and you're going to tell me, let me pull it up again. Hey, Mark. I like it when you start it with, hey, Mark, this is what I saw. I saw the momentum and the potential to break, and I took a pullback to an area inside of triggers. And I'm going to high five you virtually. I'm going to be like, man, that is the greatest trade ever. That's everything that we talk about in the first hour. Or you're going to present a chart that says, hey, Mark, when I got 2 ticks below that blue line, I knew that my path was clear. And we're going to open up lessons for defining a clear path or weak triggers or whatever the lesson may be. Now what's going to happen is you're going to go back to feedback from class and you're going to say, okay, Mark said this was the perfect trade. Get it into my trading plan. This is my pattern. This is what I want to do. As a brand new user, more often than not, what you're going to hear is, hey, maybe you traded in determination conditions, right? Maybe you're fighting trigger lines. And what I want you to do is not just post and forget, right? I want you to take that feedback. I want you to put it into your spreadsheet, but here's the one that pays dividends. I want you to go back tomorrow morning and I want you to look at what you did today. And I want you to ask yourself what worked. And I want you to ask yourself what didn't work. What doesn't work, you're going to see in that feedback section probably repeated over and over until you learn how to fix it. That's your thing. Every trader has a thing. Early entries are a thing. Trading in determination conditions are a thing. Counter trend and losing horribly is a thing. Guys, you won't see it in the moment. You're excited. There's adrenaline. You're anxious. You're nervous. Let me help you see what's going on. And more importantly, let me give you a plan to correct it. So that's probably one of the biggest, most important steps that you could give yourself as you learn the software. So I just handed you plans, study materials. We're going to discuss the rules. You have the ability to get feedback. You have everything that you could ever hope for to be successful with the software. The only thing that you don't have under your belt is the seat time, the repetition, the doing it over, the asking for help, the raising your hands, guys. Nexgen's going to give you analysis, rules, coaching. We're going to do our part. You're going to be responsible for becoming a profitable trader, which means you're going to be responsible for learning the rules, not looking for the money. You're going to be responsible for asking for feedback, not just assuming you got the lesson right because you watched a video. That happens a lot. And guys, you're going to be responsible for following a plan, your plan, for making it repeatable and testable. I'm here to help, guys, but you got to do your part. So we're going to go through, I'm going to start with NinjaTrader, and we are going to talk about 3 rules. Each rule, when true, creates an advantage, describes an advantage. When the large chart has strong triggers, you have the advantage of momentum. The market's going to be difficult to stop. When termination conditions are false, you'll have room to target. We're just going to call it a clear path. Nothing in the way. Clear skies. And then your entry, rule number 3, will be designed to pinpoint precisely where the market is most likely to continue with a trend that is already established, that has momentum, and absolutely nothing in the way. Rule number 3 is just an entry. These 3 rules happen on 2 charts. We use a large chart and a small chart. I don't want you to overthink it. Your large chart is a slow-moving broad stroke of a brush, guys. It shows the overall opinion of the market. And you're going to use one bar, the most current bar. You'll be able to define the direction that the market is going, the trend. You'll be able to define the momentum that it is moving in the direction of the trend with, rule number 1. And you'll understand if there's something in your way that could ruin your trading party, rule number 2. Rules 1 and 2 are met using one bar. And when they're true, the market is trading way down here, and that fear of missing out is very, very real. But inside of that one bar, when the rules are met, you're going to use the small chart, the refinement chart, giving you the x-ray of the up and down ticks within that one big slow bar. And you're going to use this. You'll see a retracement. Very often in a trend trade, a retracement is nothing more than a small push that is counter to the underlying trend. Very often you will see a bounce coming right from an area, and then you will see continuation in the direction of your trade. This refinement chart pinpoints entry right about there. This refinement chart allows you to reduce risk, and this refinement chart is going to allow you to have the highest distance to your target. Your entry on a smaller, faster chart is showing you where that tail in that one bar on a large chart is most likely to get stopped and then continue back down. So it's only 3 rules. It's only 2 charts, and just accept on day 1, guys, you're not in charge. The market doesn't care about your position. The people that make the trends happen don't care that you need to pay rent, that your rent is due, that the car payment's due, that your kid has to get braces, guys. The large crowd does what the large crowd wants to do. So your first 2 rules are designed to keep you in step with the large crowd, to never fight the large crowd. The small chart, this is the small crowd. These are the people that haven't learned that lesson yet. And they fight. When the large crowd says up, they push down. And when the large crowd pushes down, they push up. And guys, we're going to pinpoint where the small crowd is most likely to fail on that small chart. And that becomes your entry for the highest probability trend trade. Now, there isn't a group of people standing in a parking lot making the market move, of course. And there's not a small crowd that fights. Guys, these are analogies. These are metaphors. But if you think of it that way, the big money wins, the small money typically fails. It kind of keeps you in step with everything that's going on. Both charts on NinjaTrader have areas. Areas, let's simplify it. If you're new, areas are horizontal lines on a large chart or a small chart. Now they all have names. There are divergence highs, which is a magenta line that prints from a pivot. If there's a loss of momentum at the pivot, it is a cyan line if that loss of momentum happens at a low. Think of divergence. Every time you hear that word, there was a loss of momentum. If the buyers were in control and the sellers steal their momentum and push the market down, you're going to see a hot pink line, bring you back to the 80s. If the sellers are in control and the buyers tell them, ha, no more, we're going to push against you and rob your momentum, you're going to see that divergence low, guys. Divergence is a loss of momentum. You're also going to see Fibonacci resistance and support. Resistance is a red line. Support is a blue line. These are areas based on tens of thousands of calculations and a pretty genius algorithm showing you precisely on a large chart where tops and bottoms may come from, and on a small chart, really precisely where entries may come from. All you need to know is that that is Fibonacci resistance. That is Fibonacci support. Yellow 1-to-1s. These are fibs in the moment. These are 100% Fibonacci alternates. They are a favorite of the large crowd for not only entry points but also exit points. You'll see them as yellow dots. They will print in the moment, and when they are no longer needed, they will stop printing. They can be resistance in an uptrend. They can be support in a downtrend. And then you're going to see the mid band. And guys, these are all on the same charts. Mid bands, when price is below it, they may behave as resistance. You'll see them magenta. And when price is above it, you'll see that mid band turn green. It may behave as support. You don't have to know what creates them. You don't have to know how they came to be. All you need to do is learn the names. So I'm going to drop that picture for you in the room. Steal it. Study it over the weekend. The other indicators that we're going to use are trigger lines. Trigger lines are moving averages, just so you know. There are small trigger lines, two solid lines. These are the faster of the two moving averages. And then there are large trigger lines, the dash lines. This is the slower. These are going to work together in everything that you do. To be honest with you, we're learning to read trigger lines. Because rule number one, these trigger lines will define the momentum in the market and give you the first advantage. For rule number two, defining termination conditions, we're going to use the location of the trigger lines versus those Fibonacci areas to decide whether or not we should sit on our hands or take a shot. And guys, you're also going to use these large trigger lines, those slow moving averages on your small chart, to define the perfect entry. Trigger lines show up in everything you do. The only thing you need to know is that these are small and that these are large. And now let's learn some rules. Are there any questions about the indicators? Any questions about two charts? Remember, guys, this is a discussion. It's not a lecture. I don't like to be lecturing. Rule number one, large chart needs strong trigger lines. Need it. Have to have it. Gotta have it. Why? Because strong trigger lines create the advantage of momentum. And guys, this is the easiest lesson you're going to get today. When you're looking at your large chart, it's either going up or down. The background is either green, which is up, or red, which is down. You can only have strong triggers if the trigger line colors, small and large, are the same as the background. So in an uptrend, to have strong triggers, small and large must be green, and in a downtrend, they must be red. And strong triggers is one look, guys. It's one look. It is in an uptrend, the smalls break above and away from the large. The large are getting wide, and there's a gap, there's space right between the two trigger lines. It's that space that defines strength. It's the separation that lets you know that they're strong. And guys, when the triggers are strong, the odds are favorable for the market to continue in the direction of the trend. In a downtrend, once again, the colors match, the space is between, the large are getting wide, and it is that space between the small and large that lets me know that the odds are favorable for the market to continue down. You're going to see charts annotated in this room, presented in this room with OFM, odds favorable momentum. When you see this, I want that to spring up in your head. Man, these are strong. The odds are favorable. Life is good. Guys, it should build like a tingly feeling in your gut that says, yes, it's going to be hard to stop this market. This is the look that I need to break key areas. And this is the one that's even going to cover some of the mistakes that I make. Guys, rule number one is rule number one for a reason, but rule number one's not a constant. It doesn't happen all day, every day. Sometimes the buyers are in control and they got all the boogie, and then sometimes the sellers got nothing but the giddy up. And then sometimes the space goes away and the momentum is lost and the gap's not there. And the smalls work their way back inside of the large triggers, guys. And we call this a weakening of the large triggers. Now, I'm a huge language nerd. If you've been with me at all, you know that that's true. And I want you to see what Nexgen has done. So what I want you to do is when I see strong, I want you to start thinking about words like odds favorable, right? This is awesome. The odds are favorable. And then when you see weak, anything can happen, up or down. And just that simple correlation between the advantage and the look, guys, should get you excited about holding patient, waiting for the strong triggers, believing in the advantage so that you can find a way to really capitalize on the strength in the move. Are there any questions about strong triggers? There's a large chart, and the smalls are below the large, right? And there was space. Look at that. There's a little tail. That's one of those pullbacks. We're going to go back and see if that was an entry. But guys, that's your look. And sometimes it's strong, and then sometimes it goes away. They pick the momentum back up, right? Look at all the strength and the push down. And look at how strong those triggers are and the push up. And look how strong those triggers are and the push down. And guys, rule number one is the easiest lesson that you'll ever get. But momentum, as magnificent as it is usually no match for a termination condition. A termination condition. It's a Fibonacci-based indicator with the potential to reverse the market. That's pretty wordy in my opinion, and I'm not that smart. You guys are. I say it's a horizontal line on the large chart. Every one of these lines on a large chart, this is where the large crowd's likely to make decisions. This is where buyers might buy and enter the market. This is where sellers might sell and enter the market. These lines are where they typically fight one another for supremacy. Guys, you'll never know what the large crowd's going to do at a termination condition. But if you identify it, you can sidestep their reaction and not become a part of it. So in order to define a termination condition, we got to get the decision-making process rolling. And that means that price reaches the area. So I want you to learn this recipe. I want you to write this down, and you'll never make a mistake. So I'm just going to type it out. Something about watching it gets typed makes it stick. So if price reaches an area, right? If price bars reach Fibonacci resistance, if price bars reach Fibonacci support, could be a divergence high, yellow 1-to-1s, one of those horizontal lines. I want you to ask yourself one question. Where are my triggers? And guys, if you reach Fibonacci resistance and none of your trigger lines, where's my 0? None of your trigger lines get above resistance, both small, both large. If none of your trigger lines get below support, 0 is your number, guys, this is a termination condition. So 0 triggers through, termination, no trades into area, rule 2 not met. Now what I just did is I taught you how to study. I taught you how to study, guys. You can go back on your large chart. Watch this. This is how trust is built. And you can say, well, we're going to find a good example. A lot of potential this morning. Price reached an area. None of the triggers broke. And sure enough, the market went down, right? And price reached the area. The triggers couldn't break. And down it goes. And price pulls back to the area and the triggers don't break. And down it goes. And look at where the start of that giant move down happened, guys. Right from price reaching Fibonacci resistance. And the market crushes to the downside, even with all that momentum. So I want you to do that study. I want you to find these pictures. I want you to annotate your charts. And I want you to say, when price reaches an area and none of my triggers break, I'm just going to sit on my hands. I'm going to wait for the reaction. My advantage is gone. And guys, these areas will break. These areas will break all day long. But here's the truth. Are you ready? Gospel truth coming at you. All the good stuff right from the heartland. More often than not, 60% of the time, they're going to hold every time. More often than not, you're going to lose a trade trading into a termination condition. Your advantage is gone. Your edge isn't present. Guys, you've got to train yourself to be patient. And they will break every now and then. You've got to learn to be okay with that. That's not your money. Your job is to find the easy money. And the easy money comes from having a clear path. So is everybody good with the recipe for a termination? That's what it's going to look like in a live market. Price reaches the area, no triggers break, big goose All right, I like it when you guys play along. What's it look like when it breaks? Well, here we go. Decisions are made at key areas, guys. Get away from the decision-making point. So here's what it looks like as the market breaks through Fibonacci support. Price reaches support. The triggers are still above, guys. This is a termination. Number one has a stop sign. Absolutely no trades into the area per the plan. You can do whatever you want. My plan says don't do it. You're going to lose more than you win. Sit on your hands, be patient, wait for the reaction. Guys, the reaction will take probably a second or two. Every line you reach will say absolutely no trades into the area right in the moment. Now, if you're already in a position, you may choose to see if it breaks. You may choose to hold that position. But rule number 2 says do not start a position into a line. If it's really going to break, you're going to see the small triggers absolutely smash through the area. Trigger lines tell the story, not the price bars. And if both small triggers and one of the large triggers get below that area of support with momentum, well, that area's got the potential to break. That's the second trade on the plan I gave you, and it revolves around having the potential to break. But it's only potential, which means that it's not high probability. It's that medium probability, which is going to be the most of your trades. Guys, you just got to manage these a little more assertively. In the plan that I give you, it gives you a 100% specific how to do it, 100, boom, checklist for entry on the potential to break. And it even teaches you how to manage it. If it breaks, if all 4 trigger lines get below support, support's in the rearview mirror. It's no longer a factor. Your trigger lines tell the story. You have a clear path. Now you're in high probability land. Now you've got the best of the best. Go look for your entry. And guys, support begins to behave as resistance, and your path remains clear until you reach the next line. When you reach the next line, you go back to number 1. Can you guys give me a little feedback? Let me know you're doing all right if you're new with me. Learn the language. Kerwin, how we doing? Price reaches a red line. If these trigger lines remain below, guess what? No trades into the area. Wait for the reaction. It's a little safety measure built in for you guys. If 3 triggers get above that red line with momentum, it has the potential to break, a lot of opportunity. But when 4 triggers get through, the path is clear. Resistance becomes support. Life is good. If you are a trading view user, I want you to remember the idea that you have to break away from an area for resistance to become support or support to become resistance. Guys, peeking its head over the top of a line does not constitute a break. And here is the first bad news is the market doesn't care about your position. The market doesn't have any feelings about you whatsoever. The second one is that there will be times when your path is not clear because of stacked areas. Guys, Fibonacci is created by the past movement in the market. The people in charge have reacted at these areas. They've created turns at these areas. They know about these areas. They respect these areas. And sometimes you'll have multiple areas. Guys, this is 90% of your day. 90% of your day is doing nothing. If you don't believe me, follow one of the KISS plans for a day. Tell me how active you are. Guys, the futures markets trade an average of $220 billion hourly. That's collective. The S&P exchanges typically $174 million per day within that market. The NASDAQ is about 269, I believe. Now, here's the good news, right? Mark keeps giving me bad news. Let's talk about the good news. Did you know that when you find a way to capture $400 a day, not if, guys, if isn't even an option, when you find that you can capture $400 a day and you can do it consistently over the course of a trading year, 252 days in a trading year, that's a 6-figure income. 6 figures. Did you know that if you capture only half of that, $200 out of the $174 million exchanged, it's a $50,000 increase in your incoming? Pretty crazy, right? Did you know that you could take that $200 a day and you could spread it out, mirror it on 5 accounts, and turn it into $250,000? Guys, day trading is not about catching every move. Day trading is not about being the first person in. It's not about being the last person at the party. Day trading for the successful traders is finding a pattern that you can prove wins more than it loses. Finding a pattern that creates a statistical advantage. Using momentum, having a clear path, and being able to define the perfect entry. Trading away from trouble, trading to trouble, and being very patient when it's not there. That would be a great supplement to a vet's pension. Thank you for your service, OG. So guys, I'm not giving you the only trade. We're learning the best trade. We're learning the highest probability trade. We're learning the trade that teaches us to recognize indicators so that we can find more. Once you understand momentum and path, guys, keys to the kingdom are yours. The golden goose is sitting in the house. The magic beans have been planted. It's time to climb the beanstalk, whatever you want to say, guys. These are the two. Once you understand them, doors open. You're going to see it in the room a lot. But we're going to define an entry area for a trend trade first. The trend is your friend, right? We're going to go pinpoint where the small crowd is going to fail. And we're going to do it with such a level of accuracy that we're going to use a limit order. We're going to wait for them right at their failure spot. And we are going to wait at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way those key areas could create a big ugly bounce or a reversal on the large chart. Where's my picture? There it is. These are exactly what we need to create the bounce on the small chart to send us rocketing in the direction of the large chart advantages. So we're going to use a limit order to buy or sell that little fight, that pullback. We're going to do it at an area. And guys, that area is going to be inside of those large trigger lines. And you have two sets on your entry chart. You've got large, they're smooth, synthetic, they're stepped. Now, synthetic is a fancy way with Nexgen of saying from a different time frame. So your large triggers, let's see if we can find one with a little separation. Here we go. Your large triggers, if I put a circle around them, these are from the small chart. And your synthetic triggers, right there, these are from the large chart. You can see how they line up. Guys, price returns to moving averages. It's regression of the mean. You're going to use these large and synthetic triggers to define exactly where the small crowd is most likely to retrace, where those down bars are most likely to go down to. But triggers aren't bouncy. They're like clouds. Areas inside of triggers, fibs, midbands, or yellow 1-to-1s inside of the retracement zone. This is where the magic happens for you guys. This is where trades come from. This is where you will sit with a limit order and say, come get me, small crowd. Bring your fight on. I know exactly where you're likely to fail, and that will become your entry. So I encourage you guys, once again, I'm going to go back to language. We're going to really lean on this today. If you've had any problems with defining your entry, you need to learn one little phrase. I am going to buy or sell a pullback. What is a pullback? It's that small retracement that's counter to everything the large crowd says. And I'm going to do it at an area, at a fib, at a midband, at a yellow 1-to-1. It's very specific. And that area is going to be inside of large triggers. Now there is one word that is going to change the whole dynamic of your life. Inside of large triggers. Areas for a bounce inside of the retracement zone. If you learn this one phrase, you will call your shots long before the market ever begins to pull back. You will call your shots way before the small crowd gets there, because your entry is a pattern. It's one pattern. It's the same pattern. And when the large chart says up, and when the large chart has momentum, and when the large chart has a clear path, what are we saying? When the large crowd wants things to go up, we're going to wait for the small crowd to fight, guys. And this is what it looks like every time for a long trade. The reversal bar begins the pullback, the retracement, the fight from the small crowd. The reversal bar is not your entry, though. The reversal bar lets you know that the fight is on. The reversal bar focuses your attention on the large and synthetic triggers. And you're going to say to yourself, when that prints and lets you in on a secret, you'll say to yourself when the market's all the way down here, I need to find those large and synthetic triggers because that's where the retracement is most likely to go. I know it because I've studied it. I believe in it. I'm going to wait for it. But trigger lines are not your entry. And one of the most common entry mistakes is I'm going to buy a pullback to the triggers, but you're not. You're going to buy a pullback at an area inside of triggers, fibs, midbands, yellow 1-to-1s. Guys, a midband is not stronger than a 1-to-1, is not stronger than a fib. When they are inside of that retracement zone, they are all equal. You're going to activate a limit order above the highest point of support, closest to the reversal bar. Because with all of that momentum and nothing in the way on the large chart, we're going to make sure we catch it if they get there. This becomes your entry for the highest probability trend trade long. Now, the methodology does a couple things for you. It shows you exactly where the market is most likely to retrace. All the way down to the bottom of those triggers is the most likely spot for the retracement. But the most likely spot for a bounce will be from the areas inside. Now, I don't know if it's going to be the high one or the low one, but because of the advantages on the large chart, I'm entering at the highest point. I am not stumbling over pennies trying to save dollars. What does this do for you in the big picture? Well, if the market is most likely to retrace to the bottom of the triggers, I still have my advantage until the market gets there. If it's most likely to bounce off an area, whether it bounces from the high point or the low point is absolutely no concern of mine. I'm still with the advantages of rule number 3. Hell, even if they push to the bottom of the triggers, I still have the advantage of rule number 3. Now, once I get below the retracement zone, once I get beyond the areas most likely to create a bounce inside of that retracement zone, my advantage is gone. Rule number 3 is out the window. There's nothing good about this trade anymore in my eyes. That's where my protective stop goes. That is where I am willing to cut ties with this trade because it's not doing what it's most likely to do. And anything that wins 70 to 80% of the time, guys, is going to lose 20 to 30% of the time. It's a cost of doing business. You know where the failure has happened. You can exit the trade there instead of moving stops off in the distance, hoping for things to do things they shouldn't. Once you get below the retracement zone, once you get beyond those trigger lines, 4 or 5 ticks, guys, you don't know if, when, or where that market is going to continue. Absolutely no trades, according to the KISS plan, are taken from beyond the trigger lines. You're going to learn to ignore Fibonacci support. You're going to learn to ignore mid bands, yellow 1-to-1s that are not inside of the retracement zone. Does that make sense, everybody? First, it's a reversal bar. Reversal bar signals the fight. It's not the entry. You'll know exactly where those up bars are most likely to go up using large and synthetic. That's your retracement zone. But that's not your entry. Your entry comes from the area within the retracement zone, the area inside of large triggers. And your limit order goes just below the lowest point. Guys, this is a magical moment where there's only one line inside of the triggers. And it just so happens that's the line that created the bounce. Any of these areas beyond triggers are not a part of the window. This is where your stop is going to be. This is where you're going to cut ties with a trade that appears to be failing. And guys, you're going to fail 20 to 30% of the time when the rules are true. It's a cost of doing business. Now, what you need to do is learn the pattern using both charts. And I'm going to tell you, no reason to even look at a small chart if the large chart isn't giving you what you need. If the large chart doesn't have momentum, it's okay to stop looking. If the large chart doesn't at least have the potential to break that area, 2 triggers above it, it's okay to stop looking. But when the large chart says, hey, we are screaming north, we have the potential to break, there's your small chart reversal bar. The market pulls, whoops, here we go, into the retracement zone, and it hits the area inside of it. And even though it doesn't straight line, remember this is a small fast chart, it ultimately goes right to where profits are collected. Guys, this is a pattern. This one happened on the 6th of this month, 2025. This exact same pattern is from 2021. This exact same pattern, do you hear the excitement in my voice when I talk about it? From 2022. And guys, if you open up that spreadsheet I gave you, you can go through here and you can click on any of these. And it's momentum, and it's a clear path, and it's a pullback to an area inside of triggers. And if you look at it, whoever chart this was, annotated with the rules, wrote down exactly why they got in. Let's try this one. Nope, not going to do that one. There are dead links, guys. Sorry, when you collect pictures for 5 years, sometimes they just don't happen. Momentum, path, pull back to an area. Does that make sense, everybody? That's NinjaTrader. That is your first round of knowledge, guys. That is using 2 charts, 3 rules, finding the best of the best. Look at that. And here we go. This is the S&P. The S&P is going great, right? Momentum, path, and entry. Does everybody see that? Do you see that circle at the tail? Do you see that it's a pullback to the area inside of triggers? This is your pattern, my friends. You have to learn this pattern. And if you do, more often than not, you know right where the market is likely to go. That's that Fibonacci resistance. You also know that it could stop the market. And guys, if you got paid a tick below, you got out at damn near the high tick. And what happened off that resistance? Boom, look at that. You didn't have to be a part of it. You're just going to start looking for short trades. And now we come down to the most current bar, and I don't have momentum, and they're trying to break. I do have a clear path, and we're just watching the market do what the market does. So just making contact. Never saw those till you learned the high probability trend trade. You're welcome, Ron. Guys, if you have a question about the high probability trend trade, I would encourage you to ask it. I want to give you answers. I don't want you wondering anything. So I'm also going to do this with you. If you're new, guess what? You feel probably something like this. Kerwin, is that about right? Who else is new in here? This is how I felt. It might as well have been in a different language, guys. There feels like there's a lot coming at you in the first day or two. So in that first day or two, this is what I encourage you guys to do. Don't worry about finding trades. Not yet. Learn the names of the areas, right? Get comfortable with the lingo. Learn the names of the trigger lines, small and large. Get comfortable with the language that's being used. And then really, instead of looking for trades, guys, give yourself a day to identify momentum. And that's all it's going to take. Momentum is just that separation. This is usually the quick one. And then take a day or two, and maybe 3 even, to learn about the clear path. And as you go through that journey, guys, one of the things that I've done, get over here, is I've given you pictures of strong triggers, of clear path, of entry. It's not the money that we are seeking. It is the process that more often than not creates the money. So if you come in looking for the trade, you're missing the pieces that produce it. But if you come in and you learn momentum, you're already a third of the way there. And then you start coupling that with the clear path. You're like, I've got everything that I need. And guys, your entries, I will say, and I'll say this with confidence, if you're really listening in the room and you're just focusing on the pieces, by your third day, the language will make almost perfect sense. You may not completely understand the concepts, but by your fourth day in the room, you'll start seeing entries. Doesn't mean that you're going to take them like a pro trader, but you're going to start to see, hey, there's something to this. And I would say by the end of your first week, and I say this with confidence, you're going to know that the software works. You're going to know that what we teach repeats itself. You're going to know that the looks are repeatable, they're testable, and they provide an edge. Now, you'll get there quicker if you keep it simple. So don't be afraid. So Kerwin, if you're like, right now you're like, oh my gosh, I don't even know what to ask. That's normal. It really is. Don't gauge your entire journey on the first step, because every step gets easier as you move forward. And I think everybody in the room will back me on that, because I was at the first step once too. All right, TradingView. If you are a NinjaTrader platform user, go fix breakfast, because TradingView is not NinjaTrader and NinjaTrader is not TradingView. There are a lot of similarities. So if you're going to do a little cross training, guys, on TradingView, you will see divergence highs and lows. You will see one-to-ones. The mid bands are ever present. But what you won't see is Fibonacci. The programmers haven't been able to make it work. Not yet. Our programmers are stubborn and driven. So there's a company called Chart Prime. And there are free versions, guys, and the free versions are pretty darn good. I use a company called Chart Prime. They create areas of supply and demand. If you're familiar with supply and demand, it is a byproduct of where the market has reacted historically. Very similar to fibs. So we're going to use them like fibs. These on the large chart will be areas not to trade directly into, to trade away from. On the small chart, we'll also use them for entry. On TradingView, it's a 15-minute bar on your big chart, guys. A lot happens in 15 minutes. It is slow. We're going to let it define direction, momentum, key targets, and terminations. The same way we do it on NinjaTrader. Your 1-minute chart, guys, it's still a big, slow chart. Try holding your breath for a minute. And if you haven't done it in a while, it's going to be a lot harder than you thought. A lot can go on in a minute. It's going to define the immediate strength of the market, and it's going to define entry points. There is one way as a new user to read your large chart, guys. If you are accustomed to NinjaTrader, or if you have one of the more complicated workspaces, your workspace in the TradingView KISS plan, the Keep It Simple plan, whoops, wrong one. It gives you workspaces that remove all the noise, if you will. A 15-minute chart doesn't need large triggers. It's too slow. A 15-minute chart doesn't even need background colors. It's too slow. So you're going to define direction by recognizing whether the small triggers are up or down. That's it. I can't make it any easier than that. And if the small triggers are up, as a brand new user following the plan, you're only looking for rules to be met for long trades. And if the triggers are down, you're only looking for rules to be met for short trades. So on this particular picture, it's the exact same bar 3 times. The direction of the market is up. That's it. I'm only looking for longs. And then once I know which direction the market is going, I want you to see this. You could skip this middle section and you could ask yourself, do I have room to targets? I've got the direction defined. Do I have room to get to trouble so I can make money? Pretty simple. Is everybody good with that? First it's direction, then it's room. Now I'm going to give you something because management is a big part of what we do. We're going to use the relationship of price against those triggers to define the momentum of the market, guys. So I need to find the most current price. That's always highlighted in green. And I'm going to ask myself, is the most current price the top of the bar in an uptrend, the bottom of the bar in a downtrend, that where those two corners are? Are they left of the triggers? Is it inside of the triggers? Is it right of the triggers? If it's left of the triggers, this is the strong side, guys. This is the loosest management. This is where the market is more likely to smack into big targets than it is not. This is where 1 minute areas have a better chance of breaking, guys. This would be your odds favorable momentum. This is an outstanding look. If they are to the right side of the triggers, above them in a downtrend, below them in an uptrend, you are on the weak side of the triggers. Here comes that language again. Strong, weak. When I have weak triggers, before I ever enter the market, I know 1 minute areas are more likely to create a bounce. My brain tells me instantly, manage your trade, get paid at trouble, wait for the next opportunity. This is not a home run look. And guys, if I am in a transition, if I'm not quite strong, but I haven't made it to weak, I'm going to say to myself, I see that 1 minute trouble. I'm going to take partial profits. I'm going to get to break even. This is kind of that potential to break look. This is that medium probability look. And guys, before I ever enter the market, I know exactly how I'm going to manage it. And that takes a lot of the stress out of trading. So I made in TradingView a little training sheet here. Here we go. Most current bar. The market is going up. This is the S&P. Does everybody see those small triggers up? That's pretty easy, right? That's an easy lesson. Where is the most current price? See it moving? Am I left of the triggers? Am I inside of the triggers? Am I right of the triggers? Strong, transition, weak. Does everybody see that they are, in fact, transition? And then the only question left is, do I have room to trouble? And because I only put one indicator on here, guys, I have all the room to trouble. I have ridden, now I'm weak. Look at that. They're still up. Weak side, still have room to trouble. That's your read. It really is that fast. And once you have that read, once you have room to targets, you can go look for a trend trade because you've defined the trend and you've made sure that there's nothing in the way on the big chart. And then you go to the 1 minute chart and you make sure that there's nothing in the way on the 1 minute chart. Trading into areas on the 1 minute chart is the biggest broken rule. It results in the most losers for you guys. I watch it every day. So not having something in your way. Well, Mark, how much room is good is enough room? Great question. You have to answer it for yourself. My yardstick, my measuring stick is if I don't have at least $100 profit potential between my entry and the first sign of trouble, I choose not to take the trade. Once you have a clear path on both charts, you're going to buy or sell a pullback at an area, that should sound familiar, at a zone, at a 1-to-1, or a mid-band. And guys, you're going to wait for the close on the weak side of the small triggers because that's where reversals come from. So with the large chart up, I wonder why that shifted like that. With the large chart up, with price on the strong side, nope, transition, with room to trouble, I wonder if that'll adjust in the moment. There we go. I'm going to turn my attention to the smaller, faster chart. And the smaller, faster chart, just like Ninja Trader, is trading way up here. And I'm saying, I need a trend trade. And my rules say I need a pullback. So the second my small triggers roll against me, the trade is setting up. Once the small triggers point down, while these small triggers are up, the trade is setting up. I'll draw a box around an area lower and I'll say, okay, push, get down there, please. And once it gets there, my entry is an up bar, a green bar that closes, finishes 100% above those small triggers. Reversals come from the weak side of triggers. That's your small chart reversal, which happens to be launching you in the direction of the large chart advantages. And in a downtrend, it's no different. It's just on its head. There it is. When the large chart is down, when there's absolutely nothing in the way, when the small triggers turn up against the down, I draw boxes at higher areas. I say, hey, this is where my trade happens. And I don't jump in hoping the area holds, and I don't use a limit order praying that resistance stops it. I wait for a down bar that closes on the weak side of the triggers, guys, because reversals come from the weak side of the triggers. And until you get there, that market is more likely to push in the direction of the small. But once you get it, with all those advantages, zing, pow, boom, down it goes. That's your trend trade. So guys, your job will be to learn these looks. Your job will be able to say, hey, my triggers are down. I am strong side of the triggers, but I don't have any room. Maybe I should sit on my hands. Pretty cool, right? So I wanted to go through and I wanted to do the one-on-one session today. I know I have new people. Guys, repetition is really the key to recognition. So this video will be posted. If you go to the live video streams, so if you are brand new with me, Kerwin, this is going to be great for you. Take a minute this weekend and watch today's video first hour. Pause it, take notes, write questions. And guys, I'm around all weekend typically. You can even email me a question if you need to, or bring that question back Monday. Guys, if you're working on your rules, if you're working on your foundation, your basics, take advantage of having these videos. Take advantage of having that repetition, hearing, seeing, doing the same thing until it becomes habit, until it becomes easy, until the market literally slows, hey, what's up? Slows down for you. Because you'll say to yourself, I have momentum. And it has the potential to break. And if the market pulls back to an area inside of triggers, well, there's some opportunity there. Odds favorable momentum. 3 triggers through. Oh, they didn't get me. Still momentum. Still triggers through. Still areas inside of triggers. All I need is the small crowd to get there. And if they do, whoops, oh, you stupid small crowd. If they do, that's my rules. Momentum, potential to break, looking for a pullback just below an area inside of resistance. Guys, this is your pattern. And all I need is for them to respect the pattern and come get me. And they just keep making my life difficult. Come on, small crowd. And then my areas are on the wrong side of triggers. And I'm no longer looking for the trade because rule number 3 is not met. Phil, here you go, bud. Let me just give you mine. I'll save it real quick. And I'll copy the link. So what you're going to do is you're going to click on that link. And when you do, it's going to open up for you in your browser. And there it is right there. There's the same one. It'll say copy where mine says publish. Since it's already mine and I'm signed in, it just says publish. You're going to click copy and you're going to save it. And then it'll drop down right in here. And then if you need to, here's the TV KISS plan. Let me drop it in the room one more time. Excuse me. There's the NASDAQ. There's the S&P. You can change the symbols. I mean, you can change the symbol to gold, right? I've even got an XRP chart on here. S&P, NASDAQ, you can make it anything. You can make it feeder cattle, whatever you want. The patterns work no matter what. Look at that. The triggers down, triggers down, triggers down. The market goes down. Doesn't mean that I had money in there, but it means that I sure as heck wasn't going long, getting slaughtered. I'm down. I'm strong. I'm getting below trouble. Phil, you're familiar with Ninja, right? Man, the biggest thing, Phil, and this is what got me as well. The biggest thing for me making that switch was trying not to make TradingView NinjaTrader, was trying not to make minute bars Renko bars, because the Renko bars move so much faster. So that's one of the reasons that I pulled the noise off, because as a NinjaTrader user, it was either up or down, right? It was either green or red. And for me, there was only one option. But on TradingView, and let me show you what I'm talking about. If I take my trigger lines and I add those large triggers on there, boom, 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 and I let it be green or red, what happens is I'm missing every short trade opportunity following those fast triggers. And if I back it up, look at how many long opportunities I might have missed out on by going with that background color. So one of the biggest things, Phil, is let it be its own person, right? Let it be TradingView. Let it be minute bars, and really focus on forgetting the rules for entry on NinjaTrader, and really focus on the rules. I mean, it's still a pullback to an area, right? So we're down, we're transition, we're pulling back to an area, but what we don't do on TradingView is just jump in at the area, because we would have already jumped in here and gotten run over, and we may even get run over right here. So it's pullback, and then it's close below. And man, that patience piece, Phil, for my brain, it's freaking amazing, because I love to get in the market. It makes me happy. I don't know why. So I'm forced to wait for the close on the correct side of the triggers. And right here, if I get it, man, I'm trading right back into trouble, and I'm trading right back into a mid band. And it just says to me, dude, relax. It's not your trade. And it doesn't take long. And with a little bit of practice, it becomes easier. And I made these. I love it when you guys come over, because it means hopefully I'm going to see you in the Pro Trader funding. And what you'll find is that the KISS plan is really, and I say this with the utmost confidence, is everything you need to pass an evaluation in its most basic form. There's people in the room that have done it. But here is a 60-second. These are all like right around a minute, Phil. I put these together just to try to be helpful. Large chart reads, the entry logic, trend trades, strong triggers, momentum trades, the indicators, defining trend using the smalls. And then guys, if there's lessons that you need, quick little lessons, send me a message. Let me know. I'll make all the videos I can for you. Hell, I even got a new camera this morning. Will it turn on? Here we go. Hi, guys. So we'll knock it out. Whew, good stuff. All right, let's take a break. What do you say? That's a lot of thinking for an hour. Still haven't gotten a close below. So what we're going to do for the rest of the classroom, guys, is if the rules are met per the KISS plan, it is chart prime. So let me pull it up for you. I'm a big fan of, I like to give fish away. I'll teach you how to fish, but there's things you just don't have to search for. Let me give it to you. This is a good one. So there's two ways to do it, Phil. These are like 50 bucks a month. You don't need the expensive one. Where's pricing? You don't need the expensive one. This one is everything that you could ever hope for. But if you're like, oh man, I'm still trying to figure out if I want to do this, I'm not sure that I want to be a part of the Chart Prime crew yet. Um, Under indicators here, there is dynamic supply and demand zones from Algo Alpha. That's so hard for me to say. These are free. They're pretty good. They're a little resourceful heavy, and it may be worth waiting for Black Friday deals. Yeah, choices you guys will have to make. Um, but there is a free version here. And all you have to do is type it in the search bar there. So I'll give you that picture too. I don't think these are as good personally, but that's just me. I'm opinionated. I'm old and crotchety, and most of you should get off of my lawn. You're welcome. And then Phil, as you learn it, man, use this room as a resource. Use me as a resource. Reach out via email if you need to. Catch me in Discord. I get a lot of interaction with you guys outside of the classroom as well, and I can't ignore the interaction. I got a little OCD, so when I see that little one right there, I got to go see what's going on with it. So I'll get you taken care of. All right, guys, I'm going to go walk away for a second. I'll be back in 5 minutes. When I get back, we're going to look at what you guys have done so far, posting in the room. And we're also going to do the live chart reads. And if the rules are met, we'll pull the trigger. We'll have some fun. We made some money yesterday. Look at that. Odds favorable momentum. Boom. Right. Ron, I don't need you and my wife telling me I need to be better at taking breaks. She tells me every day, she's like, you say you're about to leave, and then I wait for you, and then 38 minutes later, I'm still in the room. Yeah, I'm bad. I suck at leaving a party too. Guys, I'll see you in 5. For real, honest to goodness. Post them if you got them. Small class today. That's okay. That's okay. Here we go. Pete gets us going this morning. Dropping them in there. This cool cat Ron throwing down some pictures. Not a whole lot presented this morning, guys. Is the market just going nutty? Not giving you what you need? Ron, you are the busy one. Ron said nobody's posting. I'm going to give Mark something to talk about. Thank you, Ron. All right, guys, I'm going to go through. Little squirrely today. And here's what I want you to remember. Bum, 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 bum. I'm not the trade police. I love it. I made this picture. Isn't that pretty cool? Hey, you, don't break rules. That's not me, guys. That's not my job. My job is to teach you to read indicators. So what I'm going to do is every chart that we look at, we're going to talk about the advantages. We're going to talk about momentum. We're going to talk about the path. We're going to talk about the entry. You guys are going to ask a million questions. I'm going to give 999,000 answers. And then I'm going to have you reference the rest of them. And guys, we're just going to try to learn to read our charts a little better. So always starting on the large chart. Weak bottom. What's a weak bottom? Tattoo it on yourself yet? Not yet. You know what I did tattoo? Get tattooed, Ron? I got the Kaizen. The kanji for Kaizen. That idea that you can learn a little bit each day, become 1% better. I did get that one done. I traded tattoos with a guy that I worked with in a shop. Guys, a weak bottom. What does that mean? That means that the market's not coming from a termination condition. I got a new camera. So guys, watch for me. I'm going to be posting a lot of videos. I'm going to be talking about psychology a lot. I'm going to talk a lot about Nexgen indicators, but I want to talk about the stuff that happens outside of the plan that affects your trading. So if there's things you want to see videos on, guys, let me know, please. Strong tops and bottoms. Since there's not a lot of posts, we're gonna really lean on some lessons today, guys. What is a strong top or bottom? A strong top or bottom is a termination. It's a price reaches an area, no triggers break, that reverses the market, that makes your large triggers go from green to red or red to green. Why is it important? Because the buyers are in control. And the decision made right at that key area was so impactful that it reverses the market completely. This sets you up for the best of the best. When you have strong tops and bottoms, the next areas have a better chance of breaking. And when you don't, you've really got to keep your management hat on when you get back to a mid-band. There it is right there as well. So Pete knows that. And Pete says, check it out. I've got a weak bottom, but everything is rolling up. I've got momentum. I've got room to trouble. I'm going to go ahead and trade to that trouble, but then I'm going to GTFO because this market's been going down. Pete, this is an awesome trade. And guys, this is not a high probability trend trade. This is really kind of manipulating the momentum and just riding that wave up to the next set of trouble. Really nice job on that one, Pete. And then there's his exit. And then there's that big ugly bounce. And Pete says, I'm not trading into a termination condition, but with all that momentum, once I get above it, I'll ride the momentum again. And just boom, there it is. Using nothing but momentum and path and finding a way to capitalize. Pete, 2 for 2. Pete's like, I'm going to give him something to grumble about. Oh, there it is. Market reverse out of nowhere. Odds favorable momentum. And here's my favorite. Broke term. And this is where, Pete, I don't know if you're in here. He's not. He's already made all his money, probably gone. Guys, this is where I believe annotation really saves you. Price reached Fibonacci resistance. Price reached Fibonacci resistance. Absolutely none of the triggers broke. Pete traded directly into a termination condition. Told himself it had broken. Does that make sense? He traded directly into it. Now, in the moment, Pete knew exactly what he was doing. Pete's very in tune with his plan. But his trend trade entry was directly into a termination condition. Guys, can you give me a why if you see it? Because I want to talk about where you're headed. And this is where knowing where you are pays dividends. Hold on. It's all lessons today. It's all lessons. Pete's like, I know what he's going to say. I'm not even going to bother with him. Pete had all the momentum in the world. Pete had the best entry ever. What Pete didn't have was a clear path. Now I want you to see the genius of Pete's trade. He had strong triggers, separation between the small and large, producing momentum. He had an area inside of triggers, giving the perfect entry. And what he didn't have was 33% of his advantages, right? 33% of his advantages are gone. It's medium probability. Now I want you to see something. So OG, check this out. Very often when you're making these decisions, small chart can be a little bit of a tiebreaker. Good morning, Wayne. Do you see that he had strong triggers on the small chart? Making sure that he's really leaning on momentum. He doesn't have any divergence on the small chart, making sure that there's not even small chart indication of a loss of momentum. So Pete says, man, with this crazy momentum, with the perfect low risk entry, they're likely to at least retest the area because momentum's hard to stop. And he gets paid before he gets back to trouble. Brilliant, manage assertively. And then when it doesn't blink, he says, let's make a little extra money. So guys, you're going to get to the point where you're going to lean on those advantages and you're going to start to find more opportunities. You're going to see more ways to make money with the software. But if you don't understand the idea of momentum, you're going to miss that key factor. And if you're not recognizing there's no divergence, you're going to recognize. It is Trina's birthday. We said happy birthday to her yesterday. She said she would be taking care of the mimosa supply chain this morning, having a good time. So make sure that you tell her happy birthday from all of us if she doesn't make it into the room. Give her a hug. Side hug, you know, fun, just side, not full on hug. I've never met her. That'd be awkward. So Pete, great job. And then guys, I love it when you brag. Certificate of success, proudly presented to Peter. Passed his $50,000 account. Awesome. That's the stuff that makes me happy, guys. You being successful makes me happy. Now we're going to get into the chili dog. Guys, this is not a Nexgen trade. This is a trade created by Ron C. And it revolves around the idea that when a market is screaming in one direction and there's nothing in the way, you can take little snippets. You can capture small profits before the market changes its mind. So when everything is up, there's nothing in the way. Let's go find $110, $112.50. $112.50. Now, who in the room right now is saying 112, I can't make money. I can't eat on $100 a day. Guys, that's $100 in a minute. Can you imagine doing that 10 times a day over the course of an 8.5 hour? 137.50 on the ES. Don't mess with my math, Ron. You know I'm not that smart. Just kidding. Johnny Calculator is. How many $137.50 trades does it take in a day to get to $400? 3 of them. What's $400 a day times 252 trading days? Pretty cool, right? You don't have to hit a home run. Base hit. Base hits pay bills. Here it is again. Everything is up. Nothing's in the way. Get above trouble. Get out before anything changes. There's another one. So now we're up to 275. 2 trades. 2 minutes of his life. $275. I'm going to come back to yours, Paul. Because third trade, odds favorable momentum, nothing in the way, another 137. We're up over that $400 range. 3 trades, only 9:41 a.m. Another one, and it actually turns into a trend trade. Pretty cool though, right? So now we're up to 600-ish, 570. Oop, you posted it twice, Ron. Or I looked at it wrong. Hold on. We got one more. Get up there. One more. Boom. Another 137. So somewhere in the neighborhood of $700 on the day, guys. It is 10:27 a.m. and Ron said last one, time for the golf cart to hit the beach. And it doesn't matter to me what kind of trades you take, guys, but if you understand momentum and path, there's a way to do it. If you shelf your greed and learn how to get paid, there's a way to do it. The next trade is always coming, guys. One thing I can say about Ron, and it's impressive, is he knows exactly what he's looking for. And if he doesn't get it, he doesn't trade. That's what successful traders do. If you add cheese and onions, I like onions. Ron, great job. Go enjoy the beach. I'll see you next Tuesday. Tee. All right, let's see what Paul did here. 15-minute up, strong side, not clear. So Paul traded directly into trouble, it seems. But he made the choice to trade directly into trouble because he's on the strong side of the triggers. There's his pullback. There's his close above. There's his entry. Probably be in on Monday since we lose Thursday. Oh, that's right. Next week is Thanksgiving, huh? Good stuff. I don't know. I know the market's probably going to be open, so Thursday will be gone. I don't know about Friday. We'll see if John gives me Friday off. Trend trade entry. The zone moved. And Paul, that happens, guys. One of the things with supply and demand is they'll recalibrate. And Paul's did. And he went from having a clear path over here to apparently trading into a zone. But what he did is he said, okay, it wasn't there a second ago. I'm going to get out of trouble. I'm going to make $600. Life is going to be good. It's the perfect trend trade, Paul. Really well done. Now, Boaz had all the momentum, clear path for days, and you pulled one over on the market. Pulled one over on the market, Boaz. So how did you know? How did you know that it wasn't going to be the mid-band that holds? What made you think it was going to be that fib and not that fib and not that fib and not that mid-band and not that fib? Whoop, I guess this fib's over here, right? Guys, once you get to the wrong side of the triggers, you don't know. You don't have any idea. And you pulled one over on the NASDAQ, Boaz. Congratulations. Because it could have been any one of those, right? It could have gone, well, hell, it could have gone all the way up to there like it did. So guys, if you're gonna have momentum and the path is amazing, you can wait for that down bar, Boaz, to at least give you a fighting chance. Letting your small chart say, all right, we're going in the direction of the large chart. Because until that happens, it's a guess. So I'm stoked that you got in, and I love that you got paid. I like your exit too, right down here. I'm not telling him it's wrong, right? I'm not the trade police, but I'm saying, hey, that's an easy way to get absolutely slaughtered. I'm glad it didn't happen to you. We saw runs, we saw runs, we saw runs, we saw runs. Good stuff. Boaz, great large chart. Great large chart read. And let me make sure I didn't miss anybody here. I think we bumped ahead, got all the chili dogs, all the chili dogs. Do, do, do. I'm in a do kind of mood today, guys. Brace yourself. All right. Well, Wayne, I know we got yours. You showed up late to class. I'd already clicked on everybody. Boom. Here we go. Oh, look at those pretty bars. I like the colors. All right. So entered on the way up, add an HVA area. So let's do this one. The trend is up. Transition in 50.75. So you're in beyond trouble. It's hard to see that on a 15-minute bar, but he lets it all get above trouble. And then, Wayne, you just say, F that zone. I'm trading into it, right? You're in at 50, but you've got 18 points to get to trouble. And sure enough, trouble creates a bounce. And you're able to stay in. And then it comes back again, and you're able to stay in. And it gets back to trouble, and you get paid. And then you don't really believe that it could hold, and you give a little bit back. Right on. Stopped out below the zone you're hoping breaks. So Wayne, something to think about. Because you are transition, and even more so because you don't really have odds favorable momentum here, and I think this is one of the keys. Your hold made a lot of sense because of the strong triggers, but as those triggers die and start to roll, if I'm up at the top of a zone, I might just say it's losing, it's failing, it doesn't have the giddy up, it's only transition. I may put my stop really tight right there because at this point what I'm saying is I hope it gets through there, but it's not really giving me a sign that it does, that it's going to. Does that make sense? It's a great trade. When you've got momentum like this, I love your hold. That's a hold that comes from experience. To be able to look at your chart and say, wow, we're pushing so hard, they're probably going to retest. Most of us don't see that in the moment as a brand new user. So Wayne, lots of props there. And then this is just, that little fizzle is going to make it harder to break. Yeah. You did not move it up as far. Oh, as you did, not as you could. Yeah. But this is where I might even give it a little more. I might go 2 ticks behind that HVA line, which puts me just below the zone. And then if it doesn't just bully its way through, I give less back. But if I were strong side over here, I might give it that breathing room. But because it's transition, I want to protect my position. I hope that all makes sense. Triggers down, strong side of the triggers. Awesome. Looks like you had room to trouble. Odds favorable momentum. Pulls back to the zone. I love it. It breaks. Pulls back. This is the perfect momentum trade, Wayne. And easy 20 points for you there. Nicely done. From the strong side of the triggers with room to trouble, odds favorable momentum. Guys, this is the second trade on the plan that I gave you. This is the momentum trade. Wayne, really nicely done. Notice that your pullback to the triggers is the top of the zone that had already been broken with odds favorable momentum. So you saw something a little different, but it is. It's the perfect momentum trade. I love it. Triggers down. Hi, Mom. Momentum. All right, Wayne. It's your right. 1-to-1s, 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 right? At 12, You are 24, 212, 24, 212. So you do have room on the large chart. I'm glad this one worked. Oh, that zone was not there during trading. Cool, but the one-to-ones were, without a doubt. So momentum directly into a zone is really an expression of I sure hope momentum breaks it. And you had strong side, which is your best momentum. You had odds favorable, which is your best momentum. The only question that I'll ask you guys when you present a trade like this directly into an area that could stop the market, did you see it? Were you prepared to manage? That's it. Did you see it? Were you prepared to manage? And if you saw it, you made the choice. And you did, and yes, I know your answer. But a lot of people don't. They start looking at those large chart targets and they just say, well, it's got to get there. So I like to throw that in. Guys, remember, I don't tell you not to trade into areas. That's up to you. I can tell you you're more likely to lose than you are to win. But Wayne stacked the deck. Strong side, clear path, odds favorable. He said, if I'm going to take a chance, I'm going to do it with a drunken rugby team behind me, and we're picking fights with the chess club. Nicely done. All right. And there it is again. Fumbled on the mouse, sold instead of bought. Strong side. Room to trouble. Just jump the fudge in right at 32 flavors of trouble, right? Right into an outer band, right into a zone, right into everything that could stop the market, and it goes up for you. Is that the easy way to make money? I don't think it is. I think the easy way to make money is to let those one-to-ones break and take that same momentum trade right there, Wayne, and make a metric butt ton of money up to trouble and then protect your investment instead of trading directly into it. But those are choices that you have to make. That was the perfect momentum trade. That is a just jump in and really hope for the best. And it worked out. But once again, if he's going to hope for the best, he's going to do it with the best momentum looks ever. Some of you right now are saying, well, Mark said as long as we have strong triggers, we can jump in. It's not what I said. Mark doesn't tell you what to do. Mark points out when you guys break rules, I try to find advantages that support that rule breaking. All right. 15-minute inside strong triggers. So that's transition. Phil, I'm gonna do the very basic read with you, if you're cool with that, because I know you're learning it. Awesome. Hey, seriously, tell her happy birthday. She adds so much to this room. Buy her something really, really nice, but say it's from us. No worries. And Phil, this is just the habit that I've gotten into. Oh, I love it. I love it. Every time I look at a chart, this is exactly what goes through my brain and out of my mouth. Smalls down, only shorts. So I think in the beginning, if you not only identify the direction, but what it means to you, it helps out a lot. And then it's transition. And Phil, does it make sense that it's kind of trading inside of the triggers? Whoa, that's a big arrow. It's trading inside of the triggers, not left, not right. So what does that mean? It means when I hit something solid, I can manage. That's all it means. It just sets me up to get my mind right for what I may do when I hit something on the 1 minute. And then finally, I ask myself, do I have room to trouble? And if the answer is yes, find an entry. If the answer is no, grab a popsicle. I don't know, whatever makes you happy. So your read is decidedly, yes, you have room to trouble. You're in the transition, and the smalls are down. I think that the reads on TradingView become really easy with a little bit of practice. So what did you do? And I'm going to do this one more time too. You said 1 minute coming down from mid-band with close below small triggers. Now the only challenge with this one is you are closing directly into one-to-ones. Do you see it? So that is your fly in the ointment. Where you got in, you are below them a little bit, but honestly, that's the only one. So if these one-to-ones bounce, you're gonna lose. If they don't, you know exactly where targets need to be. It's a beautiful trade. And it's great patience on the entry. And this is where you've got to kick that that Ninja Trader idea. Because here's where you pulled back to the mid-band. Could you imagine getting in at 60 only to watch it spike 40 points up? That's a kick in the clackers, without a doubt. But your awesome patience, getting to the right side of those small triggers, getting to the weak side where reversals come from so that you can go with large chart advantages. Phil, I don't think you're going to have any problems with TradingView. Did it make your target? Outer bands are beautiful targets. And then from the strong side, when it starts really pushing down, divergence lows, outer bands. And I like that. You see the one-to-ones, right? But one-to-ones started printing right on. One of the things you can do too is those one-to-ones are like at 75. Lock 30 points in and see if it breaks. Right on. You said just get paid. You were in at 1375. Oh, 113.75. You're out at 14. So you made 99 points. Is my math right there? 86. You made 99 points on this trade. That's a day. Phil, go swing golf clubs. But it's amazing, isn't it? That is the easiest trade you'll ever take. You had every advantage. The easiest entry, nothing but patience. I love it, man. Great job. Outstanding work. I wish there was something I could tell you about it, but I just got to high five you and say, great job. All right, there we go. Now I get to do something. All right, I'm going to show you how. We'll do it on something that doesn't even resemble a trade. Use a 1-iron. Why not? Exactly. So if I have 4 contracts, Phil, we'll do it with 2 because I saw you trading a 2 lot. If I sell the market, am I in paper trading? I am. Get in that market. All right, I sell the market. I'm going to put my stop loss up in oblivion so it doesn't get hit. I'm going to put my profit target down in next year so it doesn't get hit. So I'm in the market 2 contracts. I always move my target to where I want my last exit to be. So if it's around the 1-to-1 area, maybe I have a fib, I'll always put the one from TradingView the furthest away. And then what you're going to have to do to take a partial is you're going to have to reduce your quantity. And since we sold, I'm just going to right click and I'm going to put a buy limit in. And that's really all there is to it. And if it hits that buy limit, obviously from the wrong side, it'll take 1 contract off. And it will adjust it on both stops and targets. So if I did it again, maybe I wanted targets all the way down, right? It hits my second one. Come on. And then it adjusts for me. And it hits my third one. And it adjusts for me. And now I'm down to 1 contract. But here's the challenge that you have to remember when you do this. If I put a limit order down here for partials and my stop gets hit, that limit order is going to stay there, which means that if you're like, whew, I'm out of a trade, I'm going to go get a shot of tequila. If the market goes down, you're going to go long. So you've got to remember to cancel out any limit orders that don't get used. That's the one thing that you have to pay attention to when you're using that one. Good question. Good question. And while we're talking, replay. You can go back and you can replay just straight from the screen, even a random bar. You could like pick this bar. Whoops, there we go. And just replay. It's kind of cool. I'm going to leave the replay. So let's go look at, I guess the NASDAQ, right? Triggers are down. I'm on the weak side of the triggers. If I got to close below triggers, well, would I even have room to trouble? Maybe. I would be below the 1-to-1, so I would have room to trouble on the large chart. This is a good trick, Phil. Take a trend line and put it on the large chart trouble. And what you're doing is you're saying, I can't take a close below the small triggers into this line on the large chart. Do you see it? What it does is it defines where your large chart trouble is. Now we're going. I've got 48 seconds until I know if I have the close or not. Because it's weak side, I would have to get paid right at 26. I want to get paid at trouble, which means if I'm in around 50, if it gives me a good shot around 50, I've still got a lot of room to make money. But I've still got 30 seconds to think about it until I get an entry. Do you have your timer on, Phil? Talk about patience. Watching the clock. It is right there. 15, 14, 13, 12, 11, 10. Oh, this is so exciting. 9, 8, 7, 6. Oh, come on. 5, 4, 3. Wait a minute. It's going the wrong way. 2, 1. Didn't get my entry. Pretty cool, right? Man, I am the jumping in earliest mofo you ever met, guys. Having my timer has saved me a lot of money. And now I've got another 42 seconds to figure it out. So the wait goes on. The timer is a game changer. For those of us that get antsy, that are too smart for our own good, that timer is amazing. The difference between jumping in because I hope it holds and jumping in because it's showing that it's got a better chance of holding, it just never went down. Using the 1 minute method seems like, yeah, so if I get it, I'm mashing the button. I am mashing the button. I'm saying, come on, sell. Come on, buy. And we still didn't get a close below. And now look at how we're getting above those 1-to-1s. We're from the weak side. It's a big change, Phil. It is, it's just different. It's just a little different. On Ninja Trader, right? I'm gonna wait. I'm gonna say, come back, get me. On TradingView, I'm gonna say this is my spot, but I need that immediate momentum to slow down. I need to get to the good side of those triggers. So like if you're waiting for the close, I don't have a clear path, the rules aren't met, I'd be watching this timer. So I was looking for it here and didn't get it, didn't get it, didn't get it. 3, 2, 1. That would be the first close below triggers. Stop would go above the pivot high. Obviously, I put it in the wrong spot. Stop would go above the pivot high. Because it's weak side, target would be the first sign of trouble. There's $800 in a couple seconds. Pretty cool, right? But that's it. It didn't start going down until I got the close. That's the keys to the kingdom, TradingView users. You can say all day long it should hold. You sit through a lot less drama. A lot less drama. That was kind of fun. But I mean, that was getting out at the first sign of trouble. The first sign of trouble. That was a $900 trade. You made $11.50 on paper on that one? Sorry, Victor. It's an $11.50 trade, not a $900 trade. Pretty cool though, right? I'm just messing with you, Victor. It almost seems too easy. You remember that lesson about odds favorable momentum, Phil? From Ninja Trader? That's it. So the 1 minute is your immediate strength indicator. So the separation between the small and large, it's the exact same lesson. It's just to define momentum. That's it. It has nothing to do with entry. And one of the ways you'll use that is, let's say I'm on the weak side of triggers. You may choose not to fight that momentum, right? You can see the momentum's going up. So it builds a level of patience. And if you're in a trade and you have that strong trigger look with you, Wayne did it perfectly earlier. He was willing to hold for a little bit more because the large chart said that it was an option. But that's all it is. It's just immediate strength. The small are the fastest, which is why we wait for the close on the correct side of the small. The large are the slower, which is why we piece them together to give us a big impression of what the immediate strength is. And since it's a 1 minute, that's some giddy up. That's got a little something behind it. And now we're down, transition directly into a zone. I got nothing to do. I have to sit on my hands. I can't find a rule met trading directly into trouble. So I say, see ya. What's the S&P doing? Well, 2 triggers through. Divergence says it's likely to fail. Look how quickly it failed after that second divergence. And now I'm waiting for a clear path. I really need a clear path. Push up. Give me something good, right? Give me a reason to go look for an entry. Give me something. Oh, look at there. Now we're starting to go. Uh-oh. 1 minute momentum is against TV trend trades. The momentum is, absolutely. Because, Phil, when we talk about the entry for the trend trade, let me find it real quick. When we talk about the entry for the TV trend trade, that immediate momentum is always against you. That's why we wait for the close on the correct side. Not necessarily odds favorable against you all the time. It depends on the length of the pullback and whatnot. And if it is odds favorable against you, correct stop placement pays dividends. You gotta give it that pivot low. But that's the right entry because these are slow. On a 1 minute, they're slow. It's the small triggers that show that immediate giddy up. Right into trouble, and there's your bounce. Pretty cool, right? But even this, where the rules aren't met, check it out. Down, 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 close on the correct side. A little dance, but that's where the market started retracing. All up, close on the correct side. That's where the market went down. And you can really see this a lot. It's pushing up. I don't even know if the rules are met, but it didn't start going down until the close on the correct side. And then it's sideways, and it's sideways. And when you look at it here, look at this, pulling up, pulling up, pulling up. It tries to go down. Might have made $1 or $2, and then it goes down for real with the close on the correct side. So just not fighting the small triggers. I say without hesitation, you will lose more than you win if you try to fight the small triggers. If you try to go against that immediate momentum, well, I won't say you will because I can't see the future. I lose more than I win when I fight those small triggers. So, awesome. Guys, don't have rules on either chart right now, which means that I need you guys to tell me what to talk about. Because all we're doing for the rest of the day. Man, Paul saw it last night, Morgan. I don't know what's going on. Try right-clicking and reloading NinjaScript, or click on your chart and hit F5. Try to reload NinjaScript, see if that fixes it. I haven't seen that. Maybe doing a data refresh, repairing, resetting data maybe. Those would be like the little things that I tried. And then if nothing works, go to Jason. Let me go over and see if anyone's chit-chatting about it. Nobody is. Yeah, I would. If you do it, let us know how it works out. Rule number 2, keeping us patient, right? Can't go long, can't go short yet. Let's see if they break. Oh, they're trying. Let's get some triggers through. There's one trigger line. That's not enough. There's 2, 3 trigger lines. That's pretty good. Oh my gosh, look at this. Are they going to pull back to an area inside of triggers? With 3 trigger lines through, divergence might kill it. I got to be ready. It's only potential. Whoop, I didn't even have time to get ready. There's my reversal bar, reduce risk behind it. You want to see if they make the fib? 3 divergences would be an exit condition. We'll just go break even and see if momentum wins. Another divergence, but those small triggers are down. There's another pivot, another stop placement. Still pushing. Oh, are they going to get us? I don't know. Yeah, probably. There it is. That's not so bad though, right? Can anybody make their decisions that fast? I can. Pretty good at this stuff. Guys, the more in tune you are with your rules, the faster you'll make decisions. With everything still down, we're coming up on a potential continuation entry. Divergences kill the trade, push it higher when the small triggers roll down. Looking for a little pullback to the mid-band, fibs right at the small triggers. And if you're going to take a shot, your entry comes from that area right there. That's what we call a continuation entry. It's not a guarantee. You would say, come get me right at the mid-band. Well, they missed me. It happened too fast. And now we're waiting again. That makes sense, everybody? That was the perfect trade. We managed it, got out break even, I think. Got slipped. It was so fast. Termination, no momentum, no reason to go short. From the termination condition, they're coming to retest it. Maybe second higher divergence. Pushes up. Oh, there it is. The fight is on. The fight is on. Some days it's just more fun to watch and read, guys. Some days it's just more fun. If it's too fast to say, I can't go short into trouble. I can't go long against down triggers. Well, let's just sit here and talk about what we see. I see no shorts, no momentum, no clear path. I see no longs. It's not with the trend. The triggers don't support it. Good question, Phil. Here, let me answer it through interpretive dance and haiku. Not really. Give you the slideshow. Bum, bum, bum. Do, 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 do. So here's the first thing on management. Learn how to read your large chart. Can't stress that enough. Know where you're at. That's the first step. So for trend trades, pivot highs. So the market comes up, the buyers fail, you enter the market. Pivot highs for trend trades. There it is again. And then when you're holding for those bigger moves, using those pivots to chase behind, market comes up, goes down, new stop. Market goes up, comes down, new stop. Same thing here. Enter on the trend trade. Market goes up, comes down, new stop, new stop, new stop. Great way to chase it. When you graduate into momentum style trades, it's much tighter. You're saying this is the zone I anticipate to hold. I'm going to be maybe 4 ticks behind it. If they hit me, chances are it's turning into a trend trade. Hiding right behind the zone. And if they hit me with this look, it's probably turning into a trend trade. That is the world's shortest PowerPoint. But there it is for a little reference. Yeah. And what happens is there's days like today. I'll show you the picture that I took this morning because we were talking yesterday about risk, guys. We were talking about risk isn't a number first. Risk is deciding that you're in the perfect trade, right? Knowing that you have everything working for you 100%, that's your rules-based entry. Guys, this is a 2 lot and it's $2,600 worth of risk on that trade. That's a big, scary number. If you are in an Apex $50,000 account or a Nexgen $50,000 account, if this is part of your 20 to 30, if it's part of that 20-30% that typically fails, your account's gone. That's it. So you have to make the decision if you're willing to take that trade. Well, I took it on simulator because I'm practicing to follow rules. I'm practicing to put my stops in the right place. I'm practicing to believe that when everything is perfect, I have a higher chance of winning than losing. So risk is first having the perfect trade and mitigating it like that. And then second, risk is a number. I messed up on my ATM and got out too early, so I jumped back in on this one. But up $1,700 in the one trade, not bad, right? And that's because I had an ATM strategy that was set to take really fast profits and go break even. So it actually, with that bar structure, I didn't give it any chance to run. So risk it's going to change every time. The risk on this trade in at 92, 109 was about $360 a contract. It was about $360 a contract. That's $720 worth of risk. Was it worth it? With the advantages, with momentum, with path, are you willing to have that risk on the trade? Only you can answer it. But when you know what's working for you, you're more inclined to accept that number. And if it is just too big, it's okay to not take the trade, right? Is there anyone in the room being forced into taking trades? Is there like a trade trafficking ring that has you held hostage? Blink twice. I'm going to send help. All right, guys. I'll be back in 5. I'm going to leave you on NinjaTrader just because it won't go off screen. Odds favorable. Well, we got momentum. We got path. I've got no areas inside of triggers. Son of a gun, I can't define an entry. I don't know if, when, or where that market's going to continue down because rule number 3 is not defined. So I'll see you guys in 5. Stretch your legs. Think of something smart to say when I come back. It's Friday. See you in a few. back. Anybody in the room notice that price reached Fibonacci resistance? None of the triggers broke, and sure enough, it bounced down. And in a weird turn of events, price also reached an area. None of the triggers broke, and it instantly bounced up. Pretty cool, right? You knew about them. You saw them. They didn't sneak up on you or surprise you. You just got to wait for them to do what they're going to do. All right, guys, what do you want to talk about? Doesn't have to be rules, doesn't have to be anything. What's on your mind? What's going to make your life easier? Not trading in determination conditions will make it easier. There's no doubt in my mind on that. I'm going to share something. Let me find it real quick. Here we go. This may resonate with some of you. 6 signs you know you're maturing as a trader. The first one is that you manage your risk and then you manage your reward. One of the great things about Nexgen, and guys, just I don't do stuff that I don't believe in. One of the great things about Nexgen is that we hand you a recipe every day to reduce your risk. You reduce your risk by trading with momentum, and you can reduce the risk by having a clear path. And you can reduce the risk by defining your entry. Now, does it remove all the risk? Of course not, guys. There's always a risk in trading. But what it does is you can put yourself in a position where you can say, I have an edge, I have an advantage. This is more likely to win than it loses. Another thing that you're going to notice is that you're very relaxed. When you're taking the correct trades, when you're trading with an advantage, when you are following a proven plan, your pulse doesn't go up, guys. The anxiety's not there. You actually start to get cocky, or you're like, I know exactly where they're going to have to come get me to get me out of this trade. You find that you stop forcing trades, chasing trades, hoping trades win. You just simply take the same trades, and you don't have to force because you know your plan is good. This is a big one. Trading should not be your adrenaline fix, guys. It should not be your entertainment. One of the reasons Vegas is so successful is because people love dings and bells. Trading is a business. Trading is about making money. Trading is about covering risk. Trading is about doing the same thing repeatedly to bring success, to change your life. If you owned a flower shop, you wouldn't put a tiger in there to chase people just to make it exciting. I don't know. Go jump out of planes, right? Biggest one, I think. Follow your trading plan. Your plan is proven. Follow it. People follow their plans. Those are the people that find success. We used Ron C as an example this morning. He posted 6 trades. They all looked exactly the same. He made his money. He's at the beach right now. And then this is my favorite because I'm a warm, fuzzy kind of guy. Guys, your worth as a trader and your worth as a person are 2 very separate things. You're all wonderful people. You're going to make bad decisions every now and then. You just got to learn to fix them. Having a rough day doesn't make you a bad person. Doesn't make you even a bad trader. Just means you had a rough day. That happens sometimes. Triggers are flat. I don't know if they're going to go up or down. If they were up, I wouldn't have any room. Since they are still down, if I took a close below from the area, I would want to make sure that I have room back to 29 from 50. So I'm not taking the trade directly into trouble. That doesn't make sense. Trouble can create a bounce. Guys, what do you want to talk about? Is it going to be a short week? Short day today? Am I going to set you free to run wild? We'll watch the S&P. We'll watch Rinko. See if we can get it. You guys see the fight happening there? That's the fight, right at key areas that you knew about. You don't have to be a part of. I'm going to kill the YouTube